Essentially, the overview of the total program. Step one, meet with your consultant. The consultant basically talks about the program and they try and qualify them based on the paperwork submitted. Step two, we go ahead and underwrite it over here. Uh, what happens then after that is either if you're not accepted into the program, it's because the hardship is not valid, we can't do much for them, etc., etc. If when they are accepted, we'll go ahead and send them the package. We start talking with the creditors over here in step 5. During this time, they are saving their funds to go ahead and settle out with these creditors. After the creditors are settled out, typically between 18 to 33 months, we like to be a little more conservative, probably like 36 months. They're basically graduated and debt free. That's how the whole system works in a nutshell. Qualifying. When speaking with your consumers, what you're going to want to do is you're going to want to make sure that their financial hardship is valid. You're going to want to run their credit. You can go to annualcreditreport.com and run their credit for free, and make sure that you get all the unsecured debts that are on the credit report. Sometimes people, they forget about debts that they haven't paid in the last couple of years. So let's make sure you get a tally of all those debts. Try to get the statements and the account balances and the account numbers. Um, and you're going to go ahead and submit that. All accounts must be greater than $500. Total unsecured debt must be greater than $10,000. If somebody says, "Hey, I have 5,000," make them run their credit report first. A lot of times they actually have 10. They just forgot about it. Um, this is also important. They cannot use credit cards while in the program. Creditors do run their credit during the program, and they see that, hey, well, it looks like it's just me that they don't want to pay. Well, how come you're using the other credit cards? It's more difficult to negotiate with their credit cards if they're still using other accounts. Some other things, accounts with judgments, we'll take those on a case-by-case basis. Just because there is a judgment does not mean that they're not willing to accept a settlement. Client cannot file Chapter 7 in the last 3 years. Those will not be accepted until after the 3 years have passed. Personal loans must be over a year old. 6 to 12 month payments may be made on account to include that. If you bank with one of your creditors, it's best to use a different bank to enroll during your program, because they will know, they will keep tabs on what you're making on the side. Unacceptable accounts, public utilities, secured accounts, meaning if you default on it, they're going to come after your car, your house, things like that. Student loans that are federally secured, these are immune from bankruptcy as well. Military accounts, we don't advise putting anybody in the military. They can get in trouble. Putting in military people on the account, don't advise it. Mac Tools, this is another secured account. Kawasaki, these are more secured accounts. Payday advances and federal credit unions, those are also unacceptable accounts. Client must make at least 6 monthly payments on accounts with cash advances, balances, transfers since date of transaction. These are underwriting guidelines. 0% accounts will not be accepted until the 0% time frame has expired. That's important. And the client has made at least 6 months payments on the account. After that, we can go ahead and add them in later, but you're going to have to requote them a monthly payment after we add that account. Again, so what you need to qualify, you're going to need the most current statements for all the accounts. And if you can find some accounts on your credit report that are a little bit on the old side, we advise calling the creditor and getting those accounts as well before we underwrite the program. The financial hardship, we'll go over that in the consumer enrollment agreement. Typical financial hardships are divorce, loss of job, reduced income. Medical, it's a huge reason for bankruptcy as well. Be able to make the required monthly payments. If things change, we want to know about it. If they have an additional hardship during the program, we want to know about it, and we will work with them. We're going to go over this in an Excel spreadsheet on how to calculate the minimum monthly payment. I'm just going over right now the broad picture of what debt settlement is. And finally, after the program is done, we'll send the congratulations letter, and they should be your client for life. They will be very happy about that. So let's go over one thing about unsecured debt in case you missed it. We also want to make sure these are examples of unsecured debt. The ones that can be included on the program: typical credit cards, these are unsecured. Department store cards, legal bills, unsecured personal loans, Health club memberships, Bally's, LA Fitness, 24-hour fitness, those are all acceptable credit into the program. Magazine, record fees, cellular telephone bills, signature loans, any collection agencies, and typical credit lines. Obviously, we're going to avoid the mortgages and auto loans. And again, for a full printout, a free printout, you can run one a year. Go to annualcreditreport.com so you make sure that you're getting all the program debt into the program. Let's go over um, let's go over the worksheet of how to price out payments. And again, this is also on the other YouTube video. Typically, after you enroll as an affiliate, what you're going to want to do is you're going to want to include, once you have all the statements, typical debt's going to be like $25,000. If they have a lot of Amex or Target, you're going to want to increase this to about 60%. They don't like to go below 50% at all. But most portfolios are going to be more like 50%. This is the enrollment fee. You can get this all up front, or you can try to enroll it like it is right now into the monthly payment. If you can get it all up front, then their monthly payment will change. So you click 0 right there, and now their monthly payment's $436.39. If you can't get it all up front, you have to divide it up into 3 payments. You can do that as well, but then for calculating the monthly payment, you just want to click 0 there. There's a monthly maintenance fee of $35, and again, to keep us all on the same side and to keep you competitive in this marketplace, which is expanding, we make sure that they know, your consumer knows, that we calculate our settlement fee as 15% of that which we save to them. If we don't save them $1, we don't get paid $1, so it's important that that's a key selling point. Essentially, so this Microsoft Excel document basically calculates the monthly payments out, and then you can quote them on this. The average minimum payment for $25,000 is $750, so as you can see, they're going to be saving maybe $300 some. If they can afford $520 a month, do it. Then they would essentially be saving up faster, and they get out of debt faster, and you can negotiate faster. So these are just minimums to play with. If they can't make $327 a month on the 48-month plan, we would suggest that they go over here to paralegalsolutionsinc.com, and we can try and qualify them for bankruptcy if that is the case. So total program cost, what they're going to have to save up, and with all the fees, in this case, after the enrollment fees paid, is around $14,780. Total program savings, just about $30,000. So essentially, I would obviously go over the total program savings. And again, so upon enrolling as an affiliate, we'll go ahead and get you this, so you can go ahead and price them out over the phone or in person if they come into your office.